Welcome to Real Estate Radio Live, an informative and engaging podcast discussing everything you need to know about the world of real estate. Your host, Joe Caccera, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management strategies, new construction advice, home improvement tips, and much, much more. And now, to guide you around the world of real estate, here's your host and Real Estate Radio Live team leader, Joe Caccera.
All right, welcome in, Joe Caccera with Real Estate Radio Live. Thank you for those that are tuning in on Facebook, and we are doing our weekly show with Jack Russo. It's been way too long since we've been able to have Jack physically in the studio, but here we go with the technology and the COVID-19, all those little formulas put together. We could still stay connected, minus the human touch. How you doing, Jack?
I'm well, thank you. Thank you for making special accommodations on my schedule. I'm actually going to give a lecture to a bunch of federal mediators about how to use Zoom.
Oh, there you go.
I downloaded the latest version, and it promptly told me your machine is not powerful enough to run all the features. And you remarked correctly. Well, at least it doesn't say you're too old to be running a Zoom meeting. That would be age discrimination.
That would be.
All these federal mediators are over 60 years old because they're mostly retired judges and retired lawyers. I'm one of the few that's still very active. And they're like, hey, you're the computer law guy. You got to know something about Zoom. Yeah. So I could become, I guess, a Zoom expert. Maybe that's a future thing.
That's good. Before we get started on our topic, one of the things that came up that's going to be a big topic going forward, Jack, I'd like to get your legal feedback. I know there's a lot of buzz out there in the community about this whole President Trump potentially coming down with this new, this new mandate that's going to kind of hamstring social media. What's that all about?
Well, first of all, you have to start with the view that he uses executive orders the way we use toilet paper. I mean, I swear, I don't think there's been another president. And I have to say, Barack Obama kind of started it towards the end of his last term when he was almost lame duck, which is he didn't have very much power. But he started issuing a lot of executive orders, and they are not technically statutory law. They're more like interpretive directives by the president that, look, the policy of the United States is blow your nose, or the policy of the United States is wear a face mask. Of course, he's got the opposite policies. So it's so transparently retaliatory. Yeah. What happened there is that Twitter, Jack Dorsey, finally decided to put a footnote, just a footnote, in some of the tweets like, look, we're not sure this is accurate. Like, you might want to double check, Right. To me, that's such a ridiculous, minimal thing for him to get cranky about. But he got cranky about it because it plays right into his image with his base, which is, man, you get in my way and I'm just going to punch you in the nose. And that historically goes back to the days of the McCarthy era, where the lawyer for McCarthy, Roy Cohn, took the same view. And there's a great documentary that you must see. If you want to understand Trump, watch the McCarthy documentary on PBS. Okay. It is so well done because it really talks about how Joe McCarthy turned everything into a press event. And as a result of doing that, Roy Cohn became a very, very well-known figure as someone who fights for his client. In this case, of course, McCarthy.
Yeah.
And McCarthyism.
Well, maybe next week or the week after we could follow up with that. I know that's going to be an interesting dynamic. But today we're going to talk a little bit about alternate resources to traditional banks. We talked a little bit about it last week, Jack, what was happening in the banks and, alternatives. And we could discuss that today. I know you gave some great examples and we talked about, some of the liabilities, what banks are doing. And what's ironic too, actually what goes along with the same, I don't know if you're hearing much about these forbearance. So I think there's somewhere in the neighborhood of 7 or 8 million forbearance have been granted. But so what's funny to me is, I may have mentioned this last week, and I'm seeing it firsthand now in my business. The very same lenders that are making agreements for these forbearances now are coming back and saying, well, we don't really want to finance you because you agreed to a forbearance, even though you paid it off.
Right.
It's really interesting, this dynamic.
Look, think of it this way. Banks are essentially computers. Banks are no more physical buildings. Yes, they have a physical building, but fundamentally the computer system is more important than the building, and maybe even to some degree becoming more important than the people. We sort of talked about that last time.
Right.
The days of the traditional banker are kind of over.
Right.
So what does a computer need? A computer needs data. Without data, a computer can do nothing. Software can do nothing. You need data. So computers plus software plus data equals a form of intelligence. But how do you get the data? So they are looking for every little sneeze, every little fart, every little belch, every little activity, every little body odor, every little, like they would look at me today and say, you're not dressed as a lawyer. Why are you even doing this show? You don't have a tie on. What's wrong with you? Or they might say, man, that's really cool. You look like the hip Silicon Valley lawyer. Kind of depends on how they interpret the data, but they would have a comment about it. So they are going to inevitably suck in all of this video eventually. They're not there yet. And they're going to say, Jack looks healthy. Let me tell you a story. This is a serious story. I'm going to leave the bank's name out. They're good guys, but I'm going to leave their name out because they'll probably say I'm disparaging them by telling the story. I signed a term sheet for a major commercial loan. Let's just call it around number 5 million. That's not the exact number. It's actually more, but let's just footnote that.
Okay.
And they were like, we're done. We're on board. We love you. Due diligence, da, 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 da. So I said to them, it's taking a long time. I said, we're getting to like Memorial Day soon. This was weeks ago. I might take some time off. I'm thinking about driving to Florida to visit my 90-year-old mom. I'm not going to be around. Now these days you got to give a fingerprint when you refinance stuff. You got to go through biometrics. I might not be around, man. If you're going to do this loan, let's get it done. So they call me up right before Memorial Day. They say, don't worry, we're working on it. It's going to happen. We're going to get done this month. Don't worry, it's fine. Memorial Day comes and goes. And I sent them an email and I said, I don't know what planet you guys are on, but it's the end of May and I just don't have the cycles. And plus, I really do want to go visit my mom because, she calls me up. I'm waiting to die. It's a whole nother story there.
Yeah.
All right, I won't tell that story now, but it's depressing when your mom in the 90s is like, she hasn't seen anyone for a long time. So my wife and I, she's really a good sport. She said, we'll try to prove that Elon Musk is right. We could drive a Tesla cross country. That would be quite an event. I mean, just doing that.
Look at this. As you drive, we're going to have to do a podcast while you're on the road.
Exactly. And I'm sure, the car's been a champ, but it's getting older. Yeah. So she was like, maybe you have to bring it in. I was like, no, the car has intelligence. It'll tell us if the brakes are bad. She's like, you're going to trust the intelligence of that car? I said, yeah, of course I trust it, right? But she's right. I probably would need to bring it in to do an inspection. Years ago, I used to bring it in on a regular basis to check like the oil change. There's no oil change. There's nothing to check, right? On an electric car. So now they call me up. Was it yesterday? I think it's hard to track the time. What is today? Is it Thursday?
Thursday, yeah.
All right, it was probably Tuesday. They call me up and they say, we got all the paperwork done, but we got like one little tiny change. I said, what's the tiny change? Oh, we decided to cut it down from 5 million to 3 million.
Oh, boy.
I'm like, give me I swear I was starting to yell at them. I said, you guys, that's like bait and switch, man. I paid for all the inspections. I paid for all of this. I said, come on, are you guys serious? They're like, yeah, the committee is getting leery. The committee is doing this. The committee is doing that. And I said, you guys make it so that I should just go to one of the other, I think I said something really nasty. I'll just leave that part out. I should go to one of the other, banks that I know and just move all my accounts. Of course, they start to like wake up, like, wait a minute, don't do that. Don't start that. So they were like, okay, well, relax, let's see what we can work. And, they're just trying to get probably a bit of a compromise. And I have to tell you that I think this stuff is playing out over and over and over again. And so you don't know for sure whether you have the money until you have the money. Right. Period. Full stop.
That's right.
Right? And people don't understand that. And there are clients that don't understand that you don't have the money until you have the money.
Yeah.
And, it's like that. If we had that ability to play the video right now where the guy says, "Show me the money," Jerry Maguire, "Show me the money." I mean, he's like dancing around. "Show me the money, Jerry. Show me the money."
Well, let me ask you this, without getting too personal. So some banks and some of these financial institutions will ratchet it up depending on what kind of leverage you're going to use. For instance, some of them might look at your credit, your wealth, all that. They may look at that component. And then I know others will say, well, let's take a look at the real estate holdings. And then the problem with that, they may want to loan you money, but do they cross or lean against those properties? Have they?
No, I don't usually ever allow cross collateralization. That tends to complicate your life down the road. It's okay occasionally in what I would call very limited and time limited circumstances where you need a bridge.
Temporary,
very temporary, very time limited. Like if you needed a bridge between now and say the end of the year, and there was some great opportunity, and you were really, because you got to unwind all that paperwork. There's issues there. I know there are people that do those deals, and they tend to do them artfully. But trust me, I've seen a lot of those things kind of backfire. Okay. So these guys know that. They don't even say that. But what they do is they look at everything you own. And this is the punchline I want to get to. They have me on the phone for a while because they're chatting me up. They want to keep the business, right? And they say, so what are you thinking post-COVID? You going to work for like another 15 years, another 10? Are you in good health? Like, when's the last time you've been to see the doctor? No, you start to feel like you're a workhorse. You're like, when did I put on their reins? When did I put on, you know what I'm saying? You start to feel, I mean, have I said to you, "Joe, you're great at these podcasts, but when are you thinking about giving it up? I'm kind of thinking I want to take over your real estate radio live." You'd be like, "F you, man. I'm younger than you. Get lost." And I said something like, banking I said something snotty. I'm sure they got upset with it. Banking may go away and bankers may go away, but lawyers are the second oldest profession and they're not going away. And they said, "Yeah, you're right. You're right. You're absolutely right." They were like, "We'll probably go away way ahead of you going away." I mean, it was a funny remark between us. But the point I want to get to, which is the topic today, which is, you've always got to have in business a plan B, a plan C, a plan D, a plan E, and so on. You cannot run a business or even a relatively medium-sized law practice, let's call it, not even small. Small would be just myself, but medium-sized, which is anything beyond yourself and a few other people, where you're running an office and people in an office and everything that goes with it. You've got to have a plan B and a plan C and a plan D and maybe even a plan E, because the truth is the infrastructure is not as tightly coupled as you would want to believe it is.
Right.
Because money is another infrastructure element that if it's not there, believe me, it's not like years ago, when we had tough times, and we did at Davis, Stafford, Kelman, and Fenwick for a while. They grew out, they went beyond that. We just accepted not getting paid. When I was working for City University of New York in the 1970s as a computer programmer, and Mayor Koch said, "We have no money. We're not going to make payroll this month, maybe not this quarter." We were loyal. We just still showed up to work, man. Everyone was like, "When are we getting paid?" I don't know. The city's in default. The city's in trouble. Maybe
times have changed.
Maybe it wasn't even Koch. It might have been Lindsay back then.
Times have changed.
We just were loyal. Today, it's a different deal, Joe. Today, it's a different deal. You don't pay people. They say, "Adios, amigos." I go drive Uber for a while.
Right.
They do. That's the view. So you've got to have alternatives. And knowing people like you, for example, to provide financing, smart people that can look at a collection of assets and say, and sometimes I'm sure this happens to you. I'm sure you look at a collection of assets, you say, what's all these antique cars listed on your financial statement? You got 15 Porsches ranging from 1956 to 1969. You got every year. You know what that collection is worth? And you're like, why are you in financial stress? You got to sell the Porsche collection. And of course, you know what the guy or gal's going to say, over my dead body.
Leverage it. Interesting you say that. This hasn't happened in a while. I have these clients come and say, hey, listen, we want to buy a house. The team says, where's the down payment coming from? They said, well, gold and silver. And they say, okay, well, do you have provide documentation that when you purchased it? No, it was given to us by gifts 25, 30 years ago. So they have these physical chunks of gold and silver, right? And so the way we got around it was, it sounds kind of crazy, but lenders are so fanatic about this paper trail ever since 9/11, right? Where's the money coming from? Terrorist activity. So what we had to do is they had to go to their family, and the family said, here, we're writing you a check for $300,000 for a gift from dad. And then behind the scenes, they give the gold to dad.
Well, they entrusted the gold to dad.
Well,
they did an asset-based loan. Probably that's going to be in their inheritance anyway, right? Theoretically.
Well, no, the parents gave them a gift. The point is we couldn't, as a lender, unfortunately, you can't go to the bank and sell the gold. They want to know where that gold came from.
Oh, okay. So it raises more issues than it solves.
Yeah.
So the creative approach there was, look, trust dad to store your gold.
Yeah.
He'll have a possessory lien. There's sort of a gift, but maybe if dad or mom need the money back, they're going to get it back. They got the gold as security. Let me tell you something. I think that kind of creative review often can't be done by a family member, but you as an outsider can come in and say, look, you've got some cards you can reshuffle. Why don't you put that Porsche collection with your rich uncle, and rich uncle will make a gift. Exactly. And he'll be like driving your cars every once in a while and pretend like they're his. But, it's pretty much he's going to give them back to you in his inheritance or whatever. And I think that's like a plan B, plan C, plan D, plan E. I tend to think it's further down the ranks. Plan B typically is find another bank.
Right.
Plan C typically is go to a consultant. So B is another bank. C is consultant. Like you could even attach the letters to something. Go to a consultant like yourself who says, look, I can actually, a colleague, consultant, whatever you want to call the person, who's going to help you think through what do you really have. And then there's even a plan D where you really start to, I'm going to say discard. It's not really discarding. You start to kind of look at what can you live without? Because there actually are a lot. One of the things we're learning from this COVID-19, there's a lot of things you can live without.
True.
I mean, you don't need to really absolutely have the golf course membership. Let's face it. Maybe you do, but a lot of people are like realizing time to discard, time to lighten up, time to say, delete this, delete that. And even these monthly subscriptions, sometimes you go through your monthly subscriptions like, man, I'm spending $1,000 a month on all these newspapers. They're all really free now. What the heck am I spending that money on? And usually it's like a Guardian. It's like a gift to the Guardian in London because they'd be out of business if you didn't make them a gift. Well, if times get hard, unfortunately, those gifts get cut too. And then plan E is like the exit plan, which is, look, maybe it's time to realize this business can't be stuck in the middle. It's either got to merge into a bigger business or it's got to shrink down to the small, more family business. And, that's hard for a lot of people because they're like, gosh, I can't believe I'm either selling out to, big law, if you were using a law firm analogy, I'm just using that to make a point, or decreasing down to a smaller size. Luckily, we've actually been pretty busy, and a lot of people reach us when they can't reach their bigger law firms.
Yeah, right. That's a good opportunity. I was going to ask you about that. Are you still be able to, for all intents and purposes, practice law other than the court, any kind of court proceedings or change? Is that right? I mean,
the courts are reopening and the courts are accepting electronic filing. What the courts are not doing yet is scheduling any trials.
Okay.
You can still schedule depositions, but the default for a deposition, which is the recorded testimony, just like this video, if we were having testimony, would be like a recorded testimony.
Right.
It's all by default viewed as either by phone or by video, with the understanding that a court reporter is going to be present and typing. But the reality is there's going to be a recording that really actually now is becoming more of the official record. It used to be the other way around. The court reporter was the official record. Now it's kind of becoming the recording is the official record, and the court reporter has to kind of sync up, and mistakes by the court reporter are to be ignored because the recording is really the best evidence. The recording is so good, it can be the best evidence.
Yeah. On the banks, we have about 5 or 6 minutes left. So you talked a little bit about the personal relationship with your bank. You gave an example on the commercial. Now, my understanding is, and although maybe you just validated this a little bit, so I've had people come to me that I really couldn't help with traditional financing, but then I've referred them to private banks. Let's call them, we'll leave the names out, but we all know them, that really provide, kind of pride themselves on relationship driven.
Right.
And I've seen them do some pretty creative loans if they're willing to move their accounts over and invest a certain amount of money with them.
Right.
So, but that's mostly residential. Well, I think what you're saying is that's changed even on the commercial side. I used to hear commercial like that too. As long as you moved assets and promised a certain amount of investments, they would really kind of do a lot of stuff out of the box. But you're saying that personal example, that may have changed a little bit.
Well, I think that they're always looking for data, and there's immense valuable data in the way flow of monies go inside of an account. They can see activity. It's a little bit like, if people see how you shop by fishing through your garbage, they can learn a lot about you, man. If they see a lot of beer bottles, they know more about you. If they see a lot of scotch bottles, they know a lot about you. If they see a lot of cigarette packets, they know a lot about you. And, years ago, there was a very famous U.S. Supreme Court case where someone actually got to a trash can, and the question was there an invasion of privacy? And my recollection at the time, and it may change now, but at the time the view was, you put your trash cans out there without a lock and you have no expectation of privacy. Now, we probably all believe, man, if you put your trash cans out, that's still your property until it gets in the trash. If they want to take that mixed up trash inside the truck and then dump it, and they want to fish through it with everyone else's trash, welcome to it. You're not identifiable when it's all mixed together. And that sort of plays out with this Facebook data too. People want to believe, well, Facebook is mixing it all together. But the problem is it's often traceable just based on assembling a few data points. Hey, there's only one Joe with an Italian name that is in the lending business in Los Gatos. You could trace him on 4 data points. Right. And believe me, it's very traceable. And I should tell you, I think that the most important thing to take away from this about alternative sources is you've got to keep your FICO scores up. Right. You've got to keep your records in decent shape. You got to be mindful of there are criminals out there that are trying to do identity thefts. You got to be mindful that there are account takeovers that happen. You got to look at your credit report for discrepancies. You got to deal with lates. You got to deal with stupid things that happen. Like something else happened that was stupid. I found out Bank of America didn't accept an auto payment. And they were like, what happened with Bank of America? You have like $15 on some credit card. It was on auto pay, and Bank of America didn't take the auto pay. I was like screaming at the Bank of America guy. Lee was like, you're going to have a heart attack. My wife, I was like, you're going to have a heart attack. And I swear, I elevated this thing up. I got like out of wherever they were doing the call center, Bangladesh or something. I actually got to someone in North Carolina. Like they kept accelerating. I finally got to someone that spoke decent English. I shouldn't have said Bank of America, but just call it some big bank. Basically, some big bank had screwed up, and they finally gave me an apology. They said, you're right. This was our fault. We have a computer glitch. We screwed up. We're going to change it. And then they offered like some airline mileage as
Mileage or
like,
something.
say, we'll give you 10,000 miles for the heart attack we almost gave you. I kind of laughed at that.
My kind of parting response or feedback is to those listening to this podcast is that on alternatives, be careful right now. I mean, I think what I've seen, and this is a small scale, Jack, but you've probably seen this too, but what I'm fearful of clients, so I'm sending this message out right now, thousands of people listen to this, be careful before you accept some kind of program that either offsets, delays, any kind of thing that says, don't worry, don't pay us for a couple of months. I don't care if it's a credit card, a mortgage, or be careful of that. It may sound enticing, and they may say, don't worry about it. It's not going to affect your credit, but I'm here to tell you that is BS, in some cases nonsense. It'll come back to haunt you. So I'm not saying don't do it if you're in desperate needs or desperate straits. I could see a self-employed person going, hey, listen, I'll take advantage of this 4 month, 6 month forbearance because that'll save me 25, 30 grand. And that can make the difference of me surviving over the next couple of months. But it could come back to haunt you. And I would say as we're finishing things up, be super careful and even to the extent, get some legal advice before you pull the trigger on some of this stuff.
Yeah, I agree with you 100%, Joe. The three remarks I will make is be mindful that beyond your health and all your health metrics, your financial metrics go with you forever. So pay attention to them. Take an action-oriented approach. If you see something wrong, fix it, get it fixed. And then be mindful there's a big market of opportunity. It's not just one bank. You're not stuck with one credit card. You can move the airline miles over. Don't be beholden to any gimmicks that they try to push on you. The reality is you're the customer. You have to remain in control. Be smart about your financial life. Be smarter even about your health life. I mean, literally, those metrics are pretty important. But, fundamentally, your health is at foundation. And that's where they got to. Let's just end on that. They got to. We're really glad to hear that you're going to work another 15 years, man. Maybe we should go back and make that bigger loan for you. So they ended in kind of a funny way. They started in a bad way. The conversation was okay, but it's a good story, and it's one that's worth remembering. Yeah,
very good. Well, before we get underway, remind everybody how they could reach you.
Right. So email is probably the best these days, which is Jack, J-C-K, at computerlaw.com. The website is computerlaw.com. We do pick up the phone. We actually are open, 650-327-9800. We do have offices in San Francisco and in Palo Alto. Technically, the offices are closed, but I have had a few people say to me, gosh, golly, I need to see you, and I have made some exceptions. So if you have that situation, I'm happy to help.
We're waiting for you to get some offices down here in Los Gatos in the South Bay.
Okay, well, maybe that's the next thing. Maybe that's the next thing I'll do here. Thanks, Joe. Jack. Thanks for having me. Thanks very much.
Yeah, take care. We'll see you next week.
Sure. Bye-bye. Thanks, Joe.
You're welcome. This is Joe Kuchera with Real Estate Radio Live. Thanks again for Jack Russo for joining us. Another great conversation about banking and other alternatives. For more information, you can always go to RERL-1722-Growing. Thanks again. Have a great afternoon.
You've been listening to Real Estate Radio Live. For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Subscribe to our podcast. Discover more at RERadiolive.com.